Hello viewers, we'll be going over gold and silver futures. In this video, we'll be using the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for gold and silver futures. So back to the technical analysis for gold, we're currently down 30 basis points on the 1 hour chart. We are starting to approach to negative MACD, and if we extend that further on the 4 hour chart, we are still in sideways action on the 4 hour MACD, and we're still resting on the 200 moving average, this green line. If we extend that further onto the daily chart, we start to see a slight convergence for the daily MACD, and we also see a convergence on the 9 moving average onto the 18-day moving average, this purple line. And we also see it converge higher with the above the 50-day moving average, this yellow line. So overall, I do expect sideways price action to continue. However, if we do break up to the upside, I do see a possible resistance around the price of, say, $1,760. And we had previous resistance level that dated back all the way to May 18th. And as for support, if we do average down lower, the next possible support will be around the price of $1,683, and we had previous support level around that range as well. And as time progresses, we may expect the 100-day moving average to reach to that level and act as our support as well. So if we do manage to move down lower, that price movement to the downside is roughly around, say, 2.8%. and to the upside to hit resistance that is around 1.7% to the upside. So now let's go back to the day-by-day probability model. Again, these models are now available in the link below, so do check it out. So as we progress to the 7th day, we have a 60% chance for gold futures to climb higher between 0 to 6.5%. And on the extreme case to the upside, we have a 20% chance for gold futures to climb between 6.5% to 13%. And to the downside, we have a 20% chance for gold futures to fall between negative 6.5% to negative 13%. So now let's examine the day-by-day forecast for gold futures. So as we progress to the first day, that will be a Friday, and 2 days out will be a Monday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The current trend is our blue line, and overlapping it happens to be the best match. So on here we have our current trend, and this trend we found on the line graph, and this trend dates back to April 1st to June 28th, 2011. So let's begin comparing the both trends. So on the current trend, we start off averaging above the middle Bollinger Band, and then we proceeded to touch the upper band, and then revert to touch the bottom Bollinger Band, and then revert back to the middle band. So in the trend in question, we see a similar pattern here as well. We average above the middle Bollinger Band, we eventually touch the upper band, and then reverse to touch the bottom band, and then revert back to the middle band. So what we have here is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points on the current trend. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined, April 1st to June 28, 2011, back then gold futures was up around 2.6%. So let's examine the day-by-day probability model for gold futures again. So that coincides with this standard deviation of a 60% chance between 0 to 6.5% in the next coming days. So now let's examine the technical performance of each trend. So on the current trend that we're in, we're currently down 1.8% from monthly high, up 8% from monthly low, up 5% from 10 simple moving average, down 4 basis points from 20-day simple moving average, and up 25 basis points from 50-day simple moving average. And now we examine the trend that we found, and back then it was down 4% from monthly high, up 4% from monthly low, down 1.6% from 10 simple moving average, down 2% from 20-day simple moving average, and down 1.3% from 50-day simple moving averages. So among the two trends, there are technical differences. One in the 10 simple moving average, back then it was down 1.6%, compare that to the trend that we're in right now, up 5 basis points. And in the trend on the 50-day moving average, back then it was down 1.3% from 50-day simple moving average. Compare that to the trend we're in, which is up 25 basis points. So now let's examine silver futures. So let's start off with the technical analysis. Today, silver is currently down 1.3%, and on the 1 hour chart, we are now approaching to negative MACD. And if we extend that further onto the daily chart, we do see a different story here. However, we start to see a divergence as we progress higher to turn to positive MACD. And we may find temporary support, as we may even find higher lows if we do manage to keep this level to end of day. And if we expand that further onto the daily chart, we saw a divergence in the past week, and at the moment the 200-day moving average still acts as our decent support. And if we do manage to reach that level, that price is around $17.04. And as for resistance, if we do manage to reverse higher, I do see a possible resistance around the price of $18.37. And if we were to climb higher, that price movement to the upside is roughly around 4.3%, and to the downside to hit the 200 moving average support, that is around 3% to the downside. And we do see a 9 moving average diverge onto the 18-day moving average, this purple line. And now let's examine the day-by-day probability model for silver futures. So as we progress to the 7th day, we have a 50% chance for silver to climb between 0 to 5%. And on the extreme case, we have a 25% chance of silver climbing between 10% to 15%. And to the downside, we have a 25% chance for silver to fall between 0 to negative 4.8%. So now let's examine the day-by-day forecast for silver futures. So as we progress to the first day, 2 days out, 3 days out, 5 days out, 6 days out, 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. On the line graph is the blue line is the current trend, and overlapping it happens to be the best match. So right here we have our current trend, and below is the trend that we found on the line graph. And this dates back to February 25th to May 20th, 2016. So let's begin comparing the both trends. So we start off below the middle Bollinger Band. We average above the upper middle Bollinger Band, and then once more touch the bottom band. And then towards near the end, we touch the upper Bollinger Band, and then revert back to the middle band. So now the trend in question, and we start off at the slightly below the middle Bollinger Band, average above the middle Bollinger Band, and then we proceeded to touch the bottom band, and then towards the near end, we touched the upper band, and then once more touched the middle Bollinger Band. So what we have here is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was February 25th to May 20th, 2016. Back then, silver was down roughly around 3.4%, so slightly to the downside. And if we examine the day-by-day probability model, that coincides with this standard deviation of 25% chance between 0 to negative 4.8%. So now let's examine closer on the technical performance of each trend. So on the current trend, we're currently down 5.8% from monthly high, up 20% from monthly low, down 1.3% from 10 simple moving average, down 1.3% from 20-day simple moving average, and up 6% from 50-day simple moving average. So now the trend we just examined, again, it was back in February 25th to May 20th, 2016. Back then it was down 8% from monthly high, up 11% from monthly low, down 3% from 10 simple moving average, down 4% from 20-day simple moving average, and up 1% from 50-day simple moving average. So there are technical similarities. Other than the 50-day simple moving average, back then it was only up 1%. Compare that to the current trend, it was up 6% from 50-day simple moving average. So again, we These models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.